Is that just Tesla, or are there other players at the moment in terms of when you factor in the valuation that Tesla's got? Is it stretched based on the fact that other EV players could come into the fold as well?
Now, that being said, really Tesla is the leader out in front of the pack, but we do expect others to come into the marketplace as well.
Do you agree that Tesla remains to be the market leader in the EV industry? Through the years, Tesla has proved to be in the leading spot in the rapidly rising all-electric vehicle industry. Despite rough patches over the years, Tesla proves to be the most innovative of them all. When Tesla decided to cut prices on several of its models in January, experts thought that Tesla's price cuts could spur an EV pricing war. At the time, Tesla vehicles in the US saw significant price cuts, which proved to be a double-edged sword for the electric car maker and the automotive industry in general.
Some of these published reports today say the automaker is set to cut December Model Y output at Shanghai by up to 20% from the previous month amid waning demand in China.
For context, Tesla slashed the prices of its new cars by as much as 20% in early January, making the vehicles more affordable and likely eligible for federal tax credits. However, it has adverse effects on the resale values of cars for current owners and sent ripple effects through the auto industry, which may either be a good or bad thing depending on where you're sitting. According to analysts, the price cuts suggest Tesla is prioritizing sales over profits, potentially signaling a demand problem.
Tesla dominates the market, at least here in the U.S., not so much in China. It has its competitors there.
There's demand weakening and they want to improve their sales, or it's a market share grab. Cox Automotive executive analyst Michelle Krebs commented at the time. For the industry at large, Tesla's price cuts inevitably put pressure on other automakers to offer more affordable EVs despite rising commodity costs, creating havoc for used vehicle retailers that will need to write down the vehicles and has Wall Street concerned about the first EV pricing war amid recessionary fears. Tesla's price cuts make all the other EVs look incrementally more expensive, is marginally compressive, and sends a chill across the used car market. Morgan Stanley analyst Adam Jonas wrote in an investor note.
Jonas says Tesla has room to undercut the competition. So big call by a friend of the show, Adam Jonas, always making those big calls on Tesla.
Notably, automakers regularly change prices on new vehicles, which is typically done through incentives or when a new model year comes out. However, the adjustments, upward or downward, are historically small to avoid upsetting the automotive ecosystem for both consumers and car dealers. Musk foreshadowed such a move last month in predicting a recession later this year. Do you want to grow unit volume, in which case you have to adjust prices downward? Or do you want to grow at a lower rate or go steady? Musk said during a Twitter Spaces conversation in December. My bias would be to say, let's grow as fast as we can without putting the company at risk. Still, Wall Street analysts were largely positive on the cuts for Tesla as a boom for sales.
Analysts agreed that it was really a move to grab market share. Tesla is already the #1 seller of EVs in the US, but they have ambitions to sell even more vehicles than they do right now.
Tesla has enjoyed a significantly higher profit margin on its EVs compared to traditional automakers. Its software and subscription offerings, including its advanced driver assistance systems and in-vehicle Wi-Fi, could help cushion anticipated profit losses due to the recent price cuts, as could EV tax credits. Further, the price reductions pressure other automakers or OEMs to cut prices on their own EVs.
Tesla made one of the biggest price drops in EV history. A few weeks later, Ford made its own price cut on the electric Mustang Mach-E.
Most OEMs are currently losing money on EVs, and these price cuts are likely to make business even more difficult, just as they are attempting to ramp production of EV offerings. BofA Securities analyst John Murphy wrote to investors. Meanwhile, Gerald Johnson, General Motors head of global manufacturing, said Tesla's cuts don't change the company's manufacturing plan for electric vehicles. The automaker currently sells its sub-$30,000 Chevy Bolt EV models, which are considered to be among the most affordable in the industry, as well as higher-priced models on a new battery system. We believe we have an EV for every price bracket and every market segment that we're rolling out here, Johnson said at the event in Flint, Michigan. He said Tesla's price cuts signal that the vehicles may have been overpriced to begin with. But Tesla's price cuts didn't end in January. Early this month, Tesla dropped the starting price for its two most expensive models, the Model S and the Model X, by as much as 9%. The latest price cuts target the starting prices of Tesla's higher-end models, dropping the Model S from $94,990 to $89,990 and reducing the Model X from $109,990 to $99,990. Tesla also reduced the performance variants of both models, dropping both the Model S Plaid and Model X Plaid to $109,990. It can be hard to keep track of how expensive Tesla EVs are lately, since the company has adjusted the prices so many times in the last few months. As earlier mentioned, Tesla dropped its Model Y midsize SUV to $52,990 in January, representing a nearly 20% discount. While that's been the most significant price reduction, it certainly hasn't been the only one. Although Tesla is still the dominant force in the EV market, it's facing rising competition compared to its early days. Instead of Tesla being the only EVs on the market and being able to dictate how they should be priced, it now has to consider how it lines up with other competitive EV options. That said, Tesla's strategy of lowering prices could be interpreted as a way to drive up demand. Another major reason behind Tesla's Model Y price cuts comes from the changes to the federal tax credits for EVs. With the Inflation Reduction Act of 2022, the EV you buy must fall below an $80,000 price tag if it's a van, SUV, or pickup truck, and below $55,000 for other vehicles. This change to the federal tax credit can be clearly seen in how Tesla dropped its Model Y crossover to a starting price of $52,990. Since it can still be considered as the early stages of this price war amongst EV makers, more market adjustments can be expected. Still, Tesla arguably appears to have an upper hand as it can use its market dominance as leverage in this ongoing price battle. Considering Tesla has several best-selling models in the US, it has more leeway to reduce prices across the board, as a way to drum up more demand. It also did not hurt that Tesla exited the junk-rated world after Moody's upgraded. A few days ago, Moody's Investor Service became the second credit ratings firm to endow Tesla with an investment-grade status, upgrading the company's credit score by one notch to Baa3. It follows a similar move by S&P Global Ratings in October. Tesla will maintain its position as one of the leading manufacturers of battery electric vehicles, as the company further solidifies its global footprint. Renee Lipsch, senior credit officer at Moody's, wrote in the statement. The credit grader also cited the automaker's expanding product offering, including early production of the Cybertruck slated for later this year, its regional production facilities, and heightened focus on the efficiency and financial leverage that's well below one time after Tesla repaid about $10 billion of debt in the last 3 years. Even before this, however, Tesla was already being treated like a blue-chip company by many investors and analysts. The company notably secured a $5 billion revolving credit facility earlier this year, a sign that it was nearing investment-grade status. The electric vehicle firm has little outstanding debt, and its 5-year credit default swaps are already trading in line with high-grade borrowers, according to data compiled by Bloomberg. Moody's uplift has both symbolic and practical value. Companies that rise from junk to investment grade typically benefit from cheaper financing by attracting a deeper pool of investors, and traditionally, a high-grade credential from at least 2 agencies is enough to be formally considered a blue-chip credit among rating-sensitive investors. It's a historic event for Tesla, said Joel Levington, a Bloomberg intelligence credit analyst. We continue to believe the rating upgrade cycle for the company has legs, potentially narrowing views of credit risk against Volkswagen. Notably, Tesla is the 8th largest company in the world by market cap, and its valuation helped turn Musk into one of the world's richest people. In line with this, many Wall Street analysts remain bullish about Tesla given the demand induced by its price cuts and the favorable impact of its cost reduction efforts. Based on recent surveys, UBS analyst Patrick Hummel expects 26% global EV penetration in 2025 and 51% in 2030 compared to 12% in 2022. In a market that is no longer supply-constrained, technology and cost leadership have become more important than ever, and we think Tesla is clearly the best position to win as it fully controls all the mission-critical levers in-house, said Hummel. Hummel expects Tesla to gap away further in volume and profitability compared to its peers following the launch of Cybertruck this year and the expected introduction of its cost-efficient third-gen platform in 2025. He reiterated a buy rating on Tesla with a price target of $220. However, not all analysts are bullish on Tesla. That said, Wall Street is cautiously optimistic about Tesla with a moderate buy consensus rating based on 20 buys, 10 holds, and 3 sells. The average Tesla stock price target of $212.89 suggests a nearly 12% upside from current levels. Subscribe for more.